Hey everyone, welcome back to the channel. I hope you crushed that compounding homework from last time. Today's video is huge because we're moving from theory to action. We're diving deep into financial planning and savings products. Basically, the roadmap that separates people who achieve financial freedom from those who just dream about it. Here's the truth. Most people are driving their financial lives blindfolded. They're earning, they're spending, but they have no idea where they're actually headed. Financial planning is like switching on your GPS. It tells you exactly how much you need for your kid's engineering college, that dream house in Goa, or even handling a medical emergency without panicking. Today, I'll break down how to calculate your financial health, set goals that actually work, and choose the right savings products. By the end of this video, you'll have a crystal clear action plan. So smash that like button, subscribe if you haven't already, and let's build your financial future together. Let's go. Alright, first step. Let's take your financial selfie. Before planning where to go, you must know where you're standing right now. This is called calculating your net worth, and honestly, this one number will wake you up faster than cold coffee. Here's how it works. Net worth equals assets minus liabilities. Simple, right? Your assets are everything you own that has value. Your car, your flat, your savings account, even that gold chain your mum gave you. Now liabilities are what you owe: home loans, car loans, credit card debt. That money you borrowed from your brother. Let me give you a real example. Say you have a house worth 40 lakhs, a car worth 8 lakhs, and 7 lakhs in your savings. That's 55 lakhs in assets, but you still owe 15 lakhs on your home loan and 5 lakhs on your car loan. So your liabilities are 20 lakhs. Your net worth, 35 lakhs. This number is your financial muscle. The higher it is, the easier it becomes to tackle big goals. Calculate yours today. Grab a pen and paper right now. Trust me, this exercise alone is worth watching this entire video.
Now that you know your net worth, let's talk goals, because here's where most people mess up royally. They say things like, I want to be rich, or I want to save for my daughter's wedding. And guess what? That's not a plan. That's just a wish. If you want results, your goals need to be SMART, specific, measurable, achievable, realistic, and time-bound. Let me show you the difference. Bad goal. I want to save for retirement. Good goal. I will invest 15,000 rupees every month in a mutual fund for the next 20 years to build a retirement corpus of 1.5 crores. See the difference? One is foggy, the other is a battle plan. Break your goals into 3 categories. Short-term, under 1 year, like an emergency fund. Medium-term, 1 to 8 years, like buying a car. Long-term, over 8 years, like your child's education or retirement. Write down 3 goals right now, 1 from each category. Make them SMART. When your goals are clear, your actions become automatic. This is how millionaires think. And today, you're thinking like one too. Okay, now we're getting into the juicy stuff of where should you actually put your money? Every investment option you'll ever see is built on 3 pillars: safety, liquidity, and return. Safety means, is my money protected? Liquidity means, how fast can I convert this into cash? And return means, how much will my money grow? Here's the catch. You can rarely get all 3 at once. A savings account, high safety, high liquidity, but pathetic returns. Fixed deposits, good safety, okay returns, but locked in. Stocks, potentially high returns, but risky and volatile. This is where asset allocation comes in. You divide your money across different types: equity for growth, debt for stability, maybe some gold for insurance. The famous rule: diversification. Don't put all your eggs in one basket. If you invest only in one company's stock and it crashes, you're finished. But if you spread across 10 different sectors and asset classes, one failure won't destroy you. Your age and risk appetite decide your allocation. Younger, take more risk. Closer to retirement, play it safer. This balance is everything. Now let's get practical. Where do you actually keep this money while you're planning and investing? Some people still think keeping cash at home is smart. It's not. It's dangerous, and it grows 0%. This is where banks come in, and trust me, they're more powerful than you think. Banks give you a secure, regulated place to park your money. They pay you interest, which means your money grows even while you sleep. Plus, having a bank account builds your financial credibility. When you need a loan for a house or business, that banking relationship matters. Here's a big safety net most people don't know about. The government of India insures your bank deposits up to 5 lakh rupees per customer per bank. So even if your bank collapses tomorrow, which is super rare, you're protected up to 5 lakhs. To open an account, you'll need to complete KYC, which stands for Know Your Customer. Just bring your Aadhaar card, PAN card, a passport photo, and proof of address. Done. You're now officially part of the formal banking system, and that's a big deal. Not all bank accounts are created equal, my friend. You need to pick the right tool for the right job, otherwise you're leaving money on the table. Let's break down your options. First up, the savings account. This is your everyday account. You can deposit and withdraw anytime, use ATMs, make UPI payments, everything. Interest rates are low, usually around 3 to 4%, but the liquidity is unbeatable. Use this for your monthly expenses and emergency fund. Next, fixed deposit or FD. Here, you lock your money for a fixed period, 6 months, 1 year, 5 years, whatever, and the bank pays you higher interest, often 6 to 7%. The longer you lock it, the better the rate. But remember, if you break it early, you lose some interest. FDs are perfect for medium-term goals where you won't need the cash immediately, like saving for a car or a vacation. Think of it like this. Savings account is your wallet, always accessible. Fixed deposit is your safe, locked but growing faster. Both have their place in your financial plan.
Let's continue with the other account types you must know about. Third option, recurring deposit or RD. This is perfect if you struggle with saving discipline. In an RD, you deposit a fixed amount every single month, say 5,000 rupees, for a set period, like 2 years. The bank pays you interest just like an FD, and at the end, you get a lump sum. It's basically a forced savings habit that pays you. Great for short to medium-term goals. Fourth option, and this one's important for financial inclusion, the BSBDA, or Basic Savings Bank Deposit Account. This is a zero-balance account, meaning you don't need to maintain any minimum balance. It's designed for people entering the banking system for the first time. Students, rural customers, anyone. Limited features, but it gets you started. So to recap, savings account for daily needs, FD for locking in higher returns, RD for building a saving habit, and BSBDA for getting your foot in the door. Choose based on your goal, not just what your neighbor has. Smart money makes smart choices. Now let's talk about the future, our which is actually the present. Digital banking has exploded in India, and if you're not using it, you're stuck in 2010. Gone are the days of standing in long bank queues for hours. Today, you can transfer money in seconds from your phone. Let me break down the 3 big systems you need to know. First, NEFT, or National Electronic Funds Transfer. This is for general transfers between banks, and it happens in batches throughout the day. It's reliable but not instant. Second, RTGS, or Real-Time Gross Settlement. This is for large transfers, minimum 2 lakh rupees, and it happens in real time, perfect for big payments like property deals. Third, and the king of them all, UPI, or Unified Payments Interface. This is instant, works 24/7, and you can send any amount from 1 rupee to 1 lakh with just a phone number or QR code. UPI has revolutionized how India does money. Google Pay, PhonePe, Paytm, they all run on UPI. It's fast, free, and insanely convenient. Digital banking isn't the future, it's now. But wait ye. With great power comes great responsibility. Digital banking is amazing, but you must protect yourself from fraud. Listen carefully to this part. It could save you lakhs. Rule number 1, never share your mobile banking PIN, password, or OTP with anyone. Not your friends, not your relatives, not even someone claiming to be from your bank. Banks will never ask for this information. Rule number 2, don't click on random links sent via SMS or WhatsApp claiming to be from your bank. These are phishing scams designed to steal your login details. Always open your banking app directly. Rule number 3, if you spot an unauthorized transaction, meaning someone used your account without permission, report it immediately. You have 3 working days to report it to your bank. If you report within 3 days and you're not at fault, you may have zero liability for the loss. The bank will investigate and often refund you. But if you delay reporting, you could be held responsible. Stay alert, stay safe. Your money, your responsibility. Don't let scammers win. All right, let's bring it all together with a simple analogy that'll make everything click. Think of financial planning as building your dream house. Your net worth, that's the foundation you're standing on. The stronger it is, the bigger house you can build. Your SMART goals, those are your blueprints showing exactly what rooms you want, how many floors, and the timeline to finish. Asset allocation, that's choosing your construction materials wisely, some strong concrete for safety, some beautiful glass for better views and returns, and some steel for flexibility. And finally, your bank? That's your high-tech security system, keeping all the materials safe while you're building. Every piece matters. Miss one, and your house is unstable. Get them all right, and you'll build something incredible that lasts generations. So here's your homework. Calculate your net worth today. Write down 3 SMART goals. Open the right bank account if you haven't already. Do these 3 things, and you're ahead of 90% of people out there. If this video helped you, smash that like button and subscribe for more financial wisdom. Drop your net worth in the comments. Let's celebrate progress together. See you in the next one.